these two guys, you're going to see a lot more of them in the stuff we do. And, they've been kind enough to offer their time, their resources, and most importantly, access and knowledge. Right. And I find always the gap in where we are and where we see a lot of the other people are. And quite frankly, the things we do in our clients is access and knowledge. Like, what do you have access to and what do you really know? And one of the things in working with a lot of high-end people, I realized is it's not even so much of how do you make money. It's what do you have access to do with the money and the knowledge you have on retaining it through tax planning. That's where real wealth is accumulated. And Sean was one of us at Compass. So he knows the world, he knows the systems, he knows the platform, and he really knows the culture here, right? Sean oversaw all the sales managers in Florida. He sold real estate. He's like many of us, a real estate lifer. And, Sean's one of these guys that when I met him in the beginning, he's like, Robert Refkin endorses you, but I need to see this for myself. I'm like, seriously? I'm like, I like this guy. If he vets everything himself, and if Sean's one of those friends you have, that friend you have that researches everything, and if they sign off on you, you're like, oh, it's good, I don't need to look at it. Sean's like that friend for me. And when Sean went over, and I'll let them tell you more about what they do in his relationship with Greg, I was really intrigued because, one, I was quite surprised. I'm like, this guy believes in this stuff? Like, he must have really researched it. And then he said, well, I put my own money in. I've done a couple of deals. I've worked with Greg. I've known him a long time. And then I immediately said, well, how do I bring this to all of us, right? Because one of the things that you guys said both in your feedback, and I think that's really important, is how do I create additional opportunities outside of my business? How do I learn and get access to things that most people never get access to or don't know about? And that's why when we have our retreats and stuff like that, bringing these other areas into your life, I think are very important. Because a lot of us spend time serving our clients, finding our clients investment deals, making our clients wealthy, and in the end, working for commissions. I think we need to, Fran, I think you need to mute yourself because I think I hear Michelle.
I'm sorry.
One of the things that we're going to go through today is Sean and Greg are going to introduce themselves, what they do, kind of how they work, what they're working on. And I made sure for them to leave at least a good chunk of time for questions, because this is going to be very new to a lot of us. Ben, who's not here today, has done these deals and spoken with Sean and is more familiar with institutional investing. But they have some really interesting things to share with you. And then we'll do Q&A. Guys, we'll share the recordings with the other people. Some people are here, some people are on vacation. And then ultimately, when we'll all see, Sean, you'll be with us in Atlanta.
Sure.
Right. And we'll hopefully get to see you in person. And I would like them to join us at our next retreat, which we're hopefully doing in Nashville. So I will kick it over to Sean and Greg to introduce themselves.
Awesome. Thanks, Chirag. Thanks for having us here. And speaking of Ben Moss, we just had a conversation yesterday, and I've spoken to a handful of other people that are in this group. A couple of familiar faces here, but I've shared time with Chirag and with David, and David was actually in Florida last year hosting a offsite for our management team down there. So I'm familiar with Chirag Shah Coaching and his groups and his masterminds and everything that he's brought to you guys and the team structures and what he's been able to build, and huge fan of Chirag and the team and everything that he does, and a lot of the people that are in his groups. Just to give you a quick background. So I was an agent for 5 years, back from 2009 to 2014. I've been in your shoes before. I've sold lots of buyers' homes, sellers, rentals, duplexes, multifamily, all types of different properties, invested myself. I've done flips, all kinds of cash out refinances and rentals and different things to generate as much profit as possible for investors over the years. After being an agent, I ended up getting a really good opportunity to grow a large team of agents, become a managing broker for a small boutique brokerage down here in Boca Raton, Florida called Boca Executive Realty. Grew it to about 6 offices, 250 agents, and we were acquired by private equity back in 2017. Fast forward 4 years after that, we were acquired again by Compass, which is when I ended up being the regional vice president for Compass. I oversaw 2,000 agents in the state of Florida, 15 sales managers, and we were in hyper growth mode for about 2 years as I spent my time at Compass and met a lot of the people throughout the nation, a lot of the sales managers, Chirag, David, a lot of people across the country with Compass, and I had an absolute blast working there. Meanwhile, as I was there, which my license is still with Compass, by the way, still a big fan. I'm never moving it, and I use it for referrals and different things. So hopefully I can connect some names and numbers here. And if I have any referrals anywhere throughout the country, happy to send them your way. But I've known Greg for 20 years. We went to college together, undergraduate school together, and he's just always been a serial entrepreneur. He is the CEO of Coastal. I'm the managing director for Coastal. We're a private equity / family office investment firm. And him and a group of our guys that we all went to school with have been extremely successful, had some really large liquidation events 4 or 5 years ago, which I'll let Greg talk a little bit about in a minute. And he come to me and told me, I think there's a massive opportunity that him and the team had come up with regards to trying to tap into the residential real estate space, speaking with agents and being able to potentially provide agents access to private equity investment opportunities. Hey, Tracy, how you doing?
Good. How are you?
Good. I think we met last year, maybe at Chirag's dinner at Austin. I'm pretty sure. I believe I might have met you there. If you were at that event.
So. We're not. I wasn't at that dinner. Was I at Austin? Okay. No, I wasn't there in that piece. But anyway.
No worries. For some reason, you look familiar. So yeah, I've known Greg for 20 years, and he had this opportunity and this idea that there might have been a lot of money that agents were leaving on the table, not really having access to private equity, institutional investment deals. Because what happens is you sell somebody a home, you represent a buyer, you represent a seller, and then you may not transact with them over the next few years. Could be 1 year, could be 3 years, could be 10 years. You keep the relationship going, but they may not be calling you for investment advice, right? They use their CPA, they may use their CFP, they may use wealth planners. While if you're out at an event or your kid's event, or you're at a restaurant, or you're at a philanthropic event and you meet somebody and you want to develop a relationship with them, but you may not be able to transact with them for a number of years. What if you were able to provide them opportunities to invest in real estate right now in large institutional investments, multifamily development projects, self-storage projects, Amazon distribution centers, a lot of different Class A type investments with best-in-class institutional developers across the nation. I had invested myself, so I had known how this works after doing flips, as I mentioned, and a lot of other different types of investments. And I had saw the writing on the wall when Greg reached out to me and said, based on your background and the amount of agents you've managed, do you think that this is, do you think this has legs? Do you think this is viable? And without a doubt, we kicked it off. I ended up joining Coastal, and just in the last 4 to 5 months since I've been here, there's been a handful of stories I don't want to share. I'll share a couple as we go through and get some of the dialogue going, but just opportunities where team leaders, agents on their teams, their customers, whether they're a developer in Brazil, they're a team, just an agent on one of your teams that has a customer that's been looking to invest, or a principal, all different types of people have invested with us, have brought their customers to us, because they may not be able to get access to these types of opportunities. So we wanted to go through and share some information about Coastal. I'll introduce Greg and see if you've had access to stuff like this, see what your thoughts are on this, and figure out how we can start to work together and enter together this ecosystem to be able to provide access to these types of investments. So I'll let Greg introduce himself, as he's the one that started Coastal, and kick it off and give a little bit more of a background.
Cool. Well, thank you, Sean, and Chirag, thanks for having me, and David. And it's nice to meet everybody. I'll try not to put everybody to bed before happy hour tonight. So, guys, I'm Greg Mirbaum. I'm the founder and CEO of Coastal Investment Company. I've been an entrepreneur since I was 19. I have owned, operated, and sold a handful of companies over the last 15 years. Knock on wood, luckily we've had a fair amount of success in different industries, but over the last 5 or 6 years, my whole world got opened up to the private equity and venture capital space, a world all of you have heard that term before, but maybe not had direct contact or run-in with yet, right? So there's really 3 things today we're going to talk about, and it's one of those conversations where, as a business person, you have to look in the mirror and kind of answer all these questions honestly. The first one is, Do you feel like you're investing personally and your clients are investing personally in the highest quality and best real estate opportunities that exist on our planet? 2, are you using your network and the clients that you have to maximize the amount of money that you're squeezing out of the bottle in terms of rate, opportunities to make money in different avenues? And 3, are you putting yourself in the best tax position on a consistent basis in your clients with the information you share with them? So there's 3 sayings you kind of hear your whole life, but not everybody learns how to apply them until they end up in our world. And it's the rich own real estate, the rich don't pay taxes, and the rich know how to use good debt and leverage. So most people on this call here, the rich own real estate and they go, hey, Bob, it's probably a great idea to buy an Airbnb in South Florida right now because the market's doing awesome. That's what most people go and tell their clients. So that's not what they're talking about. Everything we do in our world, it's institutional real estate, it's institutional development. So the easiest way to kind of put a wrapper around it is I have a big advisory board of about 150 years of experience from private equity and venture capital of guys that come from this space. And what we do essentially is we decide on asset classes we want to be in. So multifamily, Class A, self-storage, Amazon distribution centers, gas stations, retail. And then ultimately we decide in what part of the country, what region, and we go out and find counterparties that actually execute on the real estate. So what that means is we go out and find companies that have multi-billion-dollar track records that themselves are likely between a $2 to a $10 billion group. We knock on their door and say, hey guys, what projects in this asset class do you have coming down the pipe that we can partner and joint venture with you on? Ultimately, you'll never see, as much as you guys would probably like to, you'll never see me out there in overalls with a hammer banging in nails. You might catch Sean out there doing it every once in a while, but I certainly won't be. We pay the best to the best to go execute on the real estate. This isn't what we're talking about today, guys. This isn't, there's no question marks with this stuff. This isn't debatable. The real estate that we do is the safest and most profitable real estate that exists on the planet, except for maybe developing skyscrapers in the middle of New York City. That's about the only thing bigger than what we do. So at the end of the day, as much as you guys might think you know about real estate, which I'm sure you're all very savvy and know a ton, you're likely not in a better position to put investors in a position to make money more than a $10 billion company that's done the same thing over hundreds of times is. And I say that because when I first started talking to Sean about this about 4 years ago, Sean was my buddy that was Mr. Real Estate. He managed 2,000 agents. He's seen it all, spends every day on 1,000 of these Zooms. And he goes, Greg, I know everything there is to know about real estate. I said, Sean, every day you wake up and you live in the retail residential world. I can tell you what retail residential people do and what institutional multi-billion-dollar companies do. They're not the same. They're 2 totally different playgrounds. You're not even in the same sandbox. And over time, he became an investor, started seeing what this stuff looks like and how programmatic and rinse and repeat it is, and started realizing that at the top, it's all like monopoly. And that's really how these big multi-billion-dollar companies operate. And so really, guys, to just dumb it down, what we do is we go out and find groups that are going to build, 100 or $200 million assets, and we knock on their door and say, hey, we know you want a $25 million check for us to participate. Here's your $25 million, except it comes from 38 of us in a fund structure. Because typically, let's say Kevin has 3 or 4 clients offhand that he knows would love to invest in this kind of stuff, but they're guys that only can write a $500,000 check. If Kevin's client picked up the phone and called a multi-billion-dollar developer and said, hey, it's me, it's Bob, I want to write you a $500,000 check, they'd say, hey, hold on, click. And that would be the last time he ever talks to him. Because when you're raising billions of dollars at a time, you can't take $100,000 or $500,000 or $1 million checks to get anything done. It's impossible. And so what they want, what private equity groups want, is they want a lot of money and they want zero brain damage. So what zero brain damage means is they don't want to talk to investors. They don't want Fran calling going, hey guys, I really like the color of this building, but I don't think it should be beige. I think it should be green. They're not interested in that. They're building the same asset that they've built hundreds of times over. They want people to put their money in, sit back, and let them execute on the real estate. And so it's without a doubt that the tools and the stuff that we have access to, it's all private market stuff. You've heard the term your whole life, venture capital, REITs, hedge funds, all of it. That's the world that we live in. And to paint probably the simplest picture of who we are exactly in the food chain, and I think a lot of you, this is kind of where the light bulb goes off and you're like, okay, now I get it, is when you walk into Goldman Sachs and you talk to your banker, and you say, hey, I want to own some real estate. What can you guys sell me? The first product they're going to pull off the shelf is they're going to say, hey, Kevin, guess what? We're going to sell you this Blackstone REIT that's going to pay you a 7% coupon. And now you're the smartest guy in the world because you're getting 7% and you own a bunch of institutional real estate. Congrats. Have a great life. That's what Goldman Sachs or Wells Fargo Private Client, any major bank's going to tell you. What nobody ever stops and asks is, where does that real estate come from? Because Blackstone doesn't develop real estate. They are an aggregator of capital. All a REIT is, guys, is 20 of my apartments bundled together, turned into a securities product, then fractionalized and sold to hundreds of thousands of people through a share, right? That's all it is. And I can promise you there's a lot of money that gets made from when we take a $5 million piece of dirt, build an asset that cash flows 9 or 10 million a year and is now worth 150 million, to where Kevin's owning his 7% coupon product. There's a lot of money in between that process. And so what we really are is we are the feedstock for groups that will build REITs and sell them to retail investors. And that's what most people own when it comes to institutional real estate. They get to be the last guy in line and they never get to participate in the development and the front side of what it is that we do. So for you guys, you know, where we bring the value is right now, all of you have people in your little black book that you've known for 10 or 15 years that you've sold homes to, maybe a $5 million home, and you thought to yourself, man, I really like selling Gary that home. I'd love to do business with him again, and I feel like he really likes me, but what do I have to show him? What value can I actually bring to a guy that has a $5 million house? He's likely pretty savvy, intelligent, and has money, right? So when you bring institutional opportunities to these people that they're not seeing everywhere they turn, all of a sudden you separate yourself from everybody else. Every other agent is showing them stuff that's on the MLS, an off-market little piece of land that they want to tell you to develop a duplex on. It's the same crap over and over. We all know that. There's really very few real estate investing opportunities that one person is going to have consistently over another agent who's right in their backyard. That's just reality. And so where we feel like we can bring the biggest benefit is to give you guys tools on your tool belt, whether it's helping them with high-level tax strategy planning that they don't even know exists, investment opportunities, where all of a sudden you're engaging and getting more chances to talk to that customer and maybe earn their business in another way while they're not necessarily just buying or selling their main residence from you. So without getting way too much into the weeds, we'll start maybe there. Does everyone kind of high level follow exactly who we are and what we do? If you have any questions, you know, fire them over, but this is usually a good start to all the diarrhea coming out of my mouth.
Yeah, thank you. I also want to put it out to everybody. How many of you have ever had any of your clients or acquaintances specifically raise this issue? Like, I'm interested in doing something in the, you know, the private equity space. Or have you ever had a conversation with anyone about this? Kevin's a yes. Stacy, was that a yes? Saw a head. Wasn't sure if it was your head nodding.
I guess multifamily, David, probably be the right question. Not necessarily private equity, but how many people talk to you and go, hey, I want to buy a duplex or a quadplex. I want to own real estate that it's passive and I can own it and create income and some growth. I'm sure every one of you have had that conversation, right? And this is my first time on one of y'all's calls. So do we just do this by mostly head nods? And then I keep going. I just want to make sure I'm doing this right.
Yes, but everybody's free to speak up at any time. There's no rules about this, certainly.
Okay, got it.
Don't all jump at once.
So let's assume everybody's heard, yes, my clients want to own multifamily. Fair statement, right? And Jillian, thanks for joining us. So at the end of the day, guys, you have two options. You can show them everything that's retail on the market, which everybody else you know can show them. You might have an off-market deal here or there, which is awesome. But if you want to be able to provide a consistent flow of deal flow that are institutional products that they can look at and go, oh my God. So instead of me going and dealing with the tenants, the toilets, and the termites, I can give a company that's built and sold $5 or $10 billion worth of their real estate my money and let them go do the work and typically make more money and be safer. That sounds like a pretty good opportunity, right? Guys, it's very few and far between where you will have a client look at one of our projects. Has everyone seen one of our projects or at least a deck? Okay, so none of that got shared. So when you guys hang up, well, and Sean, thanks for not sending anybody any info to look at before the call. Perfect.
It was sent out. I think it was sent out yesterday, but they get it.
If you go to our website, if you're in front of a computer, it's probably not a bad idea to just punch in our website and kind of look at what we build. It's coastalinvestmentco.com. And it'll show you a quick glance, like 15 of our projects, kind of what they look like. So coastalinvestmentco.com. And at the way bottom, you'll see some recent projects.
And Chirag sent out a link to everybody, but in that last email. So if you haven't had a chance to look at it, it's there.
So guys,
I have a question.
Sure.
I have a few questions, actually. One, what is the minimum investment and what is sort of the average time horizon for, making money?
Great question. Both great questions. So the minimum investment on most projects, Stacy, is $100,000. Depending on if it's a venture capital deal or a pure real estate development deal. The answer to how long it takes us to make money is immediate. So a little background on me, guys. I'm a selfish investor. Anything I show you, I'm doing it because I designed it the way I want it done for when I deploy my own capital. I've got $20 million of my own money in 72 of my development projects, all equity, no debt. So the difference between us and almost everybody you meet at a bank or a financial institution is they are storytellers. You walk in and you tell them what you want to do. They're going to tell you a story about why to do this particular thing. Most of the time, if you go across the table and say, well, how much of your money do you have into these deals? The answer is zero. So if you look at our big advisory board on our website, all of the securities attorneys, CFPs, CPAs, all of our advisors all invest in the same projects in which we actually are showing you guys. And everything we do is friends and family and friends of friends. That's the only reason you guys are on this call today. I don't advertise. I'm not on billboards. Everything is a direct referral from one person away because I don't want brain damage. I don't want people that I don't know asking me a bunch of dumb questions all day and calling our office, driving us nuts. So that's why we do it that way. So to answer the back half of that question, Stacy, as an investor myself, when I write a $2 million check, everybody in life lives off income, not assets, right? And so you want cash flow immediately. And in development, a lot of times the tough part is when you write a check for a ground up development deal, it might be 3 or 4 years down the road until it's actually cash flowing at a point where it can stabilize and kick you off income. So what we do in private equity in a lot of our projects is we will purposely structure these deals to have an income feed right out of the gate. In our economics, we will over-raise on our capital stack so that we can feed our investors immediately out of the gates a 7% tax-free distribution paid on a monthly basis. So for simple math, an investor puts $1 million into a project, they're going to make $70,000 a year on that investment in tax-free distributions right out of the gates, not including any of the upside after we've built, stabilized, and sold the asset. So hopefully that first part of the question is answered in terms of immediate income. It's almost always going to happen right out of the gates because investors are impatient. They don't want to wait 4 years. Does that answer your question, Stacy? Awesome.
Great. Who else has a question so far?
Can I just chime in for a second?
Yeah, wait, I have one additional
right.
question,
Okay.
Chirag. if we were to introduce you to a client, but we're not involved in that transaction, what does that look like?
Well, so you are involved, guys. So I've dealt with realtors for a long time. Guys, I've done every kind of real estate that exists. I've built, developed, I mean, I've done everything, right, in the retail world. I know better than to think realtors are going to open me up to all their wonderful relationships and not have their hand out like, hey, buddy, when am I getting paid? Like, we know that, right? And I wouldn't expect you to. Nobody works for free. So in our world, what we sell are securities products. None of you are licensed to sell a security. So everything is structured through what's called a solicitor's agreement. You will never hear the term referral fee or anything remarkably, anything that will resemble anything like that, because in our world, if you do bad, you go to prison when you sell security. So I don't look good in orange. I barely look good in blue and black. So we do everything by the book because we have to. But it's a solicitor's agreement, Stacy, and you are involved in terms of, the introduction and kind of understanding exactly what goes on with the project. And that's kind of Sean and his team's role, is to wrap their arms around any agents that we onboard and make sure that you guys are understanding this stuff. You're kind of learning this stuff as you go, because ultimately, if this becomes a tool that you want to use, you ought to learn it a little bit and start being able to explain it intelligently, right? We want that. And so you're as involved as you want to be. We have agents that call us and go, hey, call my client. He's got $1 million, wants to invest it. Put him in the best deals. Make sure I get paid. Happens every day. Then we have agents that sit on calls with us all the time that, want to become private equity experts. And we try and help as much as we can. So I would say to start, you can be as involved with your clients as you want. Or as passive as you want. We have agents that do hundreds of millions of dollars in sales and brokers that do $1 billion a year that don't have time to add this to what they do every day. So they feed us the business. They have us kind of do our thing and then make sure everybody gets their piece of the pie. But it is open for you guys to be as involved as you'd like. So hopefully I answered that.
Chirag, you had something you wanted to add?
Yeah, I think Chirag he sent me a message to talk about in addition to the 7%. So I think, Greg, you just touched on this.
Yeah. I just wanted to answer her first question, was how quick does it take to make money? So guys, unfortunately, nothing we do happens fast. This isn't a get rich quick scheme. We are building ground up developments that take 2 to 4 years to build and sell. These are big scale projects. Now, almost anything good takes time. So just like in our projects, most of our money is made on the backside once we've built, stabilized, and sold an asset. So I'll give you a quick example of how a project would typically look. We're going to buy a piece of dirt that's $8 million. We're going to get it through zoning, entitlement, and permitting, change the density to allow us to build 400 apartments in this particular piece of land. Once that happens, we've got to build the asset, meaning go vertical, assemble the sticks and bricks, and then start putting people in it, humans, right? So over time, we're going to go from a piece of dirt to a building to people living in the building. Then what we're going to do is we're going to knock on Blackstone's door and say, hey guys, we've got this $80 million asset that makes $9 million a year in income. Do you want to buy this asset for your portfolio? And that's typically our strategy. It's build, stabilize, and sell. And so as an investor, the way the math works is our goal is to double your money every 3 to 4 years. So I'll say that part again. Our goal is to double investors' money every 3 to 4 years. Now, along the way, you're going to collect your 7% in income, right? But for simple math, let's just say Sean comes into a project and he writes a $1 million check. A $1 million check hits a 30% IRR or an ARR, which is an annual rate of return. Let's just say, or for simpler math, let's just say we hit a 25. So it took 4 years to essentially double your money, right? Everybody agrees 4 times 25 is 100. So if you made 25% on $1 million 4 years in a row, you turn $1 million into $2 million. The way an investor is going to collect that $1 million of profit, they're going to collect their 7, 7, 7, and 7 in income on an annual basis. The asset sells, they get their $1 million of principal back, and then they are owed 18, 18, 18, and 18% to get them to an annualized 25%. All of the money is made when we sell the asset to an institutional counterparty that's going to put it in a REIT, in a pension fund. That's ultimately the big payday for the developers, for us, and for the clients, and for you guys. Does everyone understand that part? If you need me to go through that again, I can, because I know that gets kind of tricky hearing it the first time.
Just a quick question on that.
Sure.
So let's say I, as the investor, own, let's just for simple math, 10%, right? And it made and I make $1 million, right? That would assume the whole thing made 10 million, right, in profit. But
Correct.
there's got to be more to that, right? There's your piece, right? I'm assuming.
Yeah, what we're talking about right now, Kevin, is net to investors after
Right.
everybody else has been paid. My goal is to make sure we can make investors 25 to 30%
Right.
net on an annual basis after everybody else has been paid. So I wouldn't try looking at it necessarily that way. I would just plan dollar for dollar, because every investor owns their pro rata portion of the entire pie. So in theory, if it was a $10 million raise, they put in $1 million, yes, they would own 10%. But dollar for dollar on the revenue split, it's a bit more complex. The easiest way to kind of understand it is that it's an internal annual rate directly net to investor. That makes sense.
Yeah. Again, the supply chain of it, right? You talked about, like, you could be the developer, right?
Yep.
Who gets the most percentage of the profit, right? Or you could be the guy who invests in the, Blackstone on, which makes only, a small percentage.
Exactly.
These investors are somewhere in the middle, because you're doing the most work, you're doing the most risk. You're giving us 7%. I'm just trying to understand where we are in the gap.
So good question. So virtually you are with the developer when you do one of our deals. So our developers, how a project is really made up is, let's say it's a $60 million development project. The developer is going to get $40 million of debt, right? LTC, 65, 30 for 35 and 65% LTC, loan to cost, on a $60 million project, 40 million of debt, 20 million of equity. We bring 20 million of equity, they go get 40 million of debt, and they go do the work, right? So you really are participating like the developer. You're getting the upside economics of being a JV with the developer, but guess what? You're never going to put a nail in a wall. And that's kind of the best part. That's what we've been able to, bridge that gap to how do we get the best returns and have to do the least amount of work, but also be in the safest position in the capital stack and ultimately not be the guy at Goldman Sachs getting the last part of the pizza, right? Like the eaten crust. So hopefully that makes sense a little better. But good question. Who else?
David, I think you're on mute.
I want to make sure we have time to get into a couple of the stories. And you said you had a couple of examples you wanted to share with everybody of some things you've done up to now. So I want to make sure we have time to hear some of those things. Is now a good time for you to share some of that stuff with us so we can kind of put a face on some of these?
Yeah, it's perfect. So yesterday, as one example, Greg and I had a call, and I was introduced to an agent maybe 3 weeks ago, and I was speaking to her, and she is a team member on a principal's team down in Miami. And this agent's been working with the developer. They live in Brazil. They're very high-end developers. They build projects that are, 10, 20, 40 stories in Brazil, $1 million to $10 million units. They wanted to come to the States, start investing, start developing projects, but they didn't have the political connections here from a zoning standpoint like they do in Brazil. They didn't understand everything that goes into it, while these institutional multi-billion-dollar vertically integrated developers here in the States already have all these relationships. They already have all these analysts looking at these deals, and they're 10 steps ahead of these new developers coming into town. So they ended up purchasing a piece of land down in Miami. it started to go a little bit sideways, and they decided we're just going to be passive real estate investors in the States. We're going to partner alongside with developers like us and participate as limited partners, which is how we participate with the general partner, the developer in these projects. So
if I can hop in for 1 second.
Sure.
Sean's exactly right, David. This is a group of guys that has access to unlimited money who have built dozens of projects all over Brazil that are $100 million plus deals. They came to the US to try and do it themselves, and they got their teeth kicked in because this is a whole different world. And they've been sitting on a bunch of land in Miami that they haven't been able to get through zoning and entitlement and permitting for over 2 years now, and their investors are losing money. And when you try and do real estate yourself and you don't have a balance sheet that's got $2 billion on it, and you're just a normal guy, you can run into issues. That's why investing institutionally is where statistically the wealthiest people in the world put their money, right? And so, yeah, I think that's a perfect example, Sean, of a story. And, just one that comes to mind because it just happened in the last 30 days with another agent at Compass, who obviously we can't mention, but an agent we talk to often, who he's been telling us about this investment client he's had for a year that has been looking for opportunities, and he can't find them anywhere to put his money. Sean had one conversation with the guy, and he's invested $1 million in 30 days into 3 deals with us.
Yeah.
As soon as he saw the deals, he goes, why wouldn't I do this? And the agent had never gone through showing someone a project. Truthfully, the agent still is learning all of this. So, it's like the first time he ever showed it to somebody, hoping to see their reaction. Once you see somebody look at the stuff that we show them, it's like nothing they've ever seen before. And as soon as they see it, they go, yeah, how do you have access to this? And again, I could tell you guys all day long about how unique and special it is, but you've got to ultimately do it yourselves and go through it to see what your people in your network react to, right? But I can assure you, if they're people with money and they're savvy investors, this isn't stuff that they look at and go, yeah, I don't want to be a part of that. I'd rather own an Airbnb. Billionaires don't own Airbnbs, guys. They don't. This is what they.
Can I ask a couple more questions? One, do you get to be like, where are most of your projects, and does the investor get to choose which project? And also, I assume the answer is no, but this can't qualify as like any sort of like 1031 exchange because it's not real property, correct?
Well, no, it certainly is real property, Stacey. A 1030, I have an unlimited amount of 1031s and QOZs. If you have clients that have needs that are on the clock, we can help them with that. To be completely honest, a 1031 is a very generic tax tool. Every CPA, when you're selling a piece of real estate, is going to tell you to do a 1031. There are tools way more sophisticated than that most CPAs don't get to see because they're not private equity people. So any 1031s, guys, QOZs, all of that stuff we can help with, even more advanced tax planning, which we'll save for another call or any one-on-one calls that we'll set up. There's stuff that we do, guys, that would blow your mind, that when you hear it, you're going to go, now I understand how Trump had a $750 tax bill. Like, we do the same stuff. It's all out there. It's all real. You're just not exposed to it, but it certainly exists. To answer your 2 questions, most of my projects are in the Southeast and the Sun Belt, Florida, Georgia, Carolinas, Tennessee, Texas. I build where the biggest demand is in the best markets. So that's primarily where everything we do is. That's our focus for the next 7 years is the Sun Belt, because there's an immense opportunity. We're 30% below the watermark of how many apartments we need today. More people are moving here than ever before. For every 4 couples moving here that make a dual income of $99,000 or less, we believe we need to build 1 new apartment building. Another thing people don't ever talk about is how many units are going out of service every year that you can't continue to do value add with. You all remember that building in Miami that collapsed and all those poor people died tragically, like a year and a half or 2 years ago. That's an example of a building that was going out of service. It was built in the 60s, can't put lipstick back on the pig, and needs to get demolished and rebuilt. but people don't always do that because they try and make a quick buck. So there's a lot of units going out of service, and we feel like the demand is just growing for where we build. So hopefully that answers that question. And yes, of course, investors get to choose which projects they want to be involved in. So how this typically works is next year, I think we'll have 18 deals that we do throughout the course of the year. We share with you guys all the project opportunities as they're available. You guys look at a deal and you go, I got a buddy in Tampa that would love this Tampa project, or a client in Tampa, that's who I want to show this deal to. You get to show anybody you want. All of the deals are specific deals, but yes, they get to choose which deals they want in and out of all the time. So that's just how we do it for every project. And then it's kind of first come, first serve that commit, because everything we do is finite. There's only so much equity. We've got hundreds of investors that invest reoccurring. Every time a deal comes in, they'll call and say, hey, put me in for $1 million. So as deals fill up, it's just first come, first serve type of thing. So hopefully that answers those questions.
Who else has a question? If you don't, I have one more, but who else has one? Okay, I have a question for Sean. Sean, the clients that these guys they have in their portfolio better than anybody with your experience at Compass, and what Coastal has done and what Coastal has coming down the pike. What can you say about the most likely best fits for the kind of people that these people have in their portfolio that they have relationships with for what it is that Coastal offers? Like, to cut through all the different processes and possibilities, what's like the thing that these guys should most be thinking about as a possibility here?
So there's so many people that I've realized that want to try to operate real estate. They want to own it. They want to rent it out. They think they want to deal with the tenants and toilets, as Greg said, but they don't understand what goes into it. So the archetype investor that we have seen has been lawyers, doctors, anybody that's very, very busy, entrepreneurs that run successful businesses, right? They don't have the time to manage 10 properties. So a lot of them that make $2, $3, $4 million a year, they don't have access to any of these institutional opportunities. Those are the best customers that we've seen, the best investors. They've very easy conversations. They want to get access to this. They've never had access to it. Their financial advisors also, if they're at Merrill Lynch or they're at Schwab or they're at Goldman, they will not sell away, right? So their advisors, they legally cannot sell away, meaning they legally cannot tell them to invest in something else, or they could lose their license. So they're not showing them this. We were on a call the other day with somebody and they said that their advisor at Goldman, I think it was you, Greg, that said that a Goldman advisor who's no longer with Goldman was saying that, or no, it was one of the agents that we were speaking with, was saying a friend of theirs was with Goldman and realized that Goldman had made more money on them than they made on their investments. And
over 10 years. Yep.
Yeah. So anybody that's looking really for passive income, that you can get into a conversation with about investing in real estate, where they say, yeah, maybe I'd buy an Airbnb, maybe I'd buy a duplex. I want to start owning real estate. They don't just end up owning 10 or 20 properties overnight where it's worth it for them. While in this case, they can write a check in the next 30 days, in the next 90 days. We help them diversify it into multiple deals in different asset classes from a risk standpoint. And they could write $1 million check in the next, 30 days or 60 days and get in a deal. So we're trying to kind of democratize private equity into the real estate space, the residential business. And based on my relationships over the years with agents, just the dozen or 2 dozen that I've spoken with, many of them have invested their own capital, and a lot of their customers that they've worked with over the years have invested. And it's not a very long process. We have one conversation. We show them the decks on the projects. Sometimes we have conversations with their CFP, their CPA, their financial advisor if they need to involve them. They vet everything. We do all the due diligence together. And then we see you later, Tracy. And then we go from there, and we help them diversify their portfolio. David, if that answers it for the type of investor that is the typical customer.
Thank you. Yeah, go ahead, Kevin.
So got it. I'm going to quadruple my money in 10 years and my kids get to go to the greatest college for free, right? So what's the look, it's awesome, right? Like it's 40%, there's big numbers, so like, if we're talking to our clients, right, we're giving them, look, they're educated clients who've made a lot of money, who have this disposable amount, so they're going to make their own decision. But like, there's a risk, right? Obviously. And so obviously I'm looking at your portfolio, like it looks really rosy, right? Like a lot of green. What is the, you know, if you were to, because we also have to answer to these clients the next event we see them at, right? And so from a transparency perspective, right, what does that look like? I mean, again, they're educated, they're going to know.
Good question, Kevin. So the reality is this: the companies that we do business with, that we've vetted, I'll give you an example. Madison Capital. Madison's been in business since 2008. They've built and sold over $5 billion worth of multifamily Class A and self-storage. They have never lost an investor a single dollar of a principal real estate transaction. Guys, this isn't retail real estate. We're not building townhomes with your uncle that you grew up with playing catch with. This is institutional companies that are worth billions of dollars. It's like going into a Tesla factory and watching them make a car. It works the same way with big apartment buildings. These groups traditionally do not lose. They don't build half of it and run out of money. It's just not something most people ever get exposed to. And so it's really hard to take someone that just understands like a residential duplex and make them understand what we do overnight. They have to go do their homework, consult with their advisors. This is statistically the safest place that you can put your money in real estate globally. This is where the wealthiest families and family offices park their money. And so the downside in anything, just like when you buy Tesla stock, is it says very clearly in the disclaimer, Kevin, you can lose every dollar. Is it likely that Tesla never goes to zero? I'd probably say so. And I think it works the same way for the kinds of groups that we deal with. But of course, the worst is that we lose all of our money, right? That's always the worst. But I would tell you it's very unlikely.
Yeah, and just to jump in, Kevin, technically speaking, I think you have the Madison Capital deck. It was in the email that I think Chirag shared yesterday, which is one of these developers that we work with. It has every full cycle investment in there with their track record. So you could see, I think their worst project did a 16% IRR. To them, that is the worst project. That was a deal that went completely sideways. They still did a 16% IRR. Annual rate.
Over 6 years. Well, Sean, over 6 years. So that's a 72 plus return on investment, right? Means you put $1 million in, you got back $1.72 million over 6 years. Guys, that's a better investment than almost anything any of you have probably ever done yourselves, right? Mm-hmm. That's why they're a multi-billion-dollar company. So it's like everybody, the problem with this stuff, Kevin, is everybody is not familiar with it. So when you see it, just like I did early on, your radar goes up and you're like, wait, why don't I know about this? I'm really smart. Right. I make $1 million a year. Guys, there's people that make $150 million a year. That's who does this stuff. And so all we do is try and break, I guess the easiest way to say it is we want to do whatever the whales do, whichever route the whales are swimming, we want to swim with them. We're just the little whale that eats like all the crustaceans off their armpit, right? That's who we are. And as you do your homework, you guys are all going to get off this call. You're going to spend an hour online and you're going to call us back and go, oh my God, this is all real. And like these people do this all the time. And once you get to that point, why I tell everybody that wants to sell, quote unquote, sell our products and be involved, that they should invest themselves, is because once you kind of see how the sausage is made and you go through it, then you're talking from this is what I do with my money, not a storyteller like your $60,000 a year employee at Wells Fargo selling you bonds, right? And so that's why we do that. We want people that sell the product to actually be invested, to go through the process, understand it, because then you're not just telling a story. To me, that's super important, right?
Just a quick, because there was a question about investing in a specific project. Is there the opportunity, like, so this idea of like there's 16 and 68% IRR, or I don't know your range. is there an opportunity to invest in a set of projects, right? So you're
Yes.
not tied to.
Fund? Yes.
Yeah.
We have a
Essentially,
project
yeah.
right now. It's called Millgreen Partners. Greg Fox is the CEO of the company. He's a dear friend of mine. He's the ex-CFO of Morgan Stanley's global real estate division. The company's building about $3 billion a year worth of real estate as we speak. And that is a diversified fund where you put $1 in and it gets split up between 9 projects. That is a group I personally have about $2.5 million of my own cash with, that has done an amazing job. And they're, again, just another best-in-class group that this is kind of what they do and they've done for decades. But honestly, Kevin, all your questions are completely normal. And that's part of your guys' job if you decide to get involved with this stuff is learn it, do your own homework, ask other people in the financial world, like, you know, have those conversations. And so as you do that, you'll see it's all very real. It's just, you know, the world isn't built for the masses, right? It's built for the 1% of the 1%. And that's what this stuff is.
Thanks.
And,
Who else has a question? Yeah, Sean, go ahead.
I was just going to, Angela, you have any questions? I know you hopped on late, but
Yeah, I did. And I'm really bummed. I apologize. I do want to, is there a place, I'm sure it's in the recording as David sent to me. Is there a place I can find this out? I am very interested.
yeah, so in the email that I think Chirag sent to the team yesterday, it should be in there. One of the project decks is in there, some information on us, some of the developers that we partner with, and then I'll send out to follow this email 2 other opportunities, one being that diversified 9 multifamily development fund. That's, in other words, what Greg was just talking about, Kevin, which you invest into 9 different funds in one pool fund. And then another real estate venture capital fund that we're launching in February. That is another great opportunity that I'll send over. So I'll share that with you. And then some previous funds that we're in as well, so that you see what we've recently got in. I can share a couple that I'm in personally as well before I ended up joining Coastal, and then in addition some more.
Yeah, guys, I think the best thing for everybody, like, this isn't stuff you're going to just learn it all on one phone call. If it's something that interests you or you think will interest your clients, set up a one-on-one call with Sean, and just, you know, get that one-on-one time, ask all the questions you want to ask, and have some notes and let him kind of show you the way he learned it, which, you know, it takes years to really understand. This stuff is big stuff, right? But it is without a doubt, guys, the best place to put wealthy people's money. There's no second guessing any of that. So I think that'd be a great next step for anybody who has any interest in hearing more. And I know we've been about an hour. I've got a 3 o'clock hard start, but I definitely wanted to be here today. And guys, it was awesome meeting everybody. Thank you so much for having me. And Sean, thanks for setting this up. But any questions or anything we can help with, let's regroup one-on-one and see if we can all make some money together. The fun part.
Love it. Yep.
Guys.
Thank you, Greg. Sean, anything you want to say at the end here?
I was just going to say that to Greg's last point, this isn't something that happens overnight, right? You're going to do your due diligence. You're going to look at everything, look at the different projects, probably send it to some people that you know or clients that might be interested in investing. We are not expecting, as Greg said in the beginning, you to open up your black book and give us 30 of your clients, right? You're gonna do your homework like you did on Chirag before you started working with him, and slowly get into this, right? We don't expect everybody to invest hundreds of thousands of dollars in the next 30 days. We build relationships over time. Some of you, Angela, Chirag, David, I've known you for a little while. You know that I'm a relationship guy. I've known for 20 years. This is something that takes a lot of time, that we're looking to do this for the next 5, 10, 20 years and help you expand your businesses, you know, by 20 or 30% per year here. Aside from just selling, being able to help people with these types of real estate investments.
Yeah, thank you. So for everybody who is here today, and for those of you who are listening on the recording, you know, Sean and Greg aren't going anywhere. They're in our orbit. They're buddies of ours. We're going to keep track of how all these conversations go. Certainly reach out one-to-one, but you know, one of the things that Chirag and I have been saying is we want to create an opportunity here for everybody in the mastermind group to do things that just aren't possible anywhere else. And so as you have your conversations with Greg and Sean going forward, and maybe some of you get invested or you invest and you have some clients invest, we're going to keep track of how things are going, and we'll keep the dialogue going and see if there's a way for somebody to jump in 3 months, 6 months, 9 months down the line that might make sense. So consider these guys allies and friends. And, as we do this work to see how we can make this work for ourselves or clients, know that that's going to be part of what we're doing going forward. So thanks, everybody. Glad to see you again today. We'll see you all again next week.
Yep. Thanks for having us, David. And
Have a good one, everybody.
Thanks, guys. Nice meeting everybody. See y'all.
Hey.